Well, what a day it was in the stock market again today. Two of my stocks are exploding, and just when you think this year can't get any better, Thursday and Friday went, hold my beer, we can do it. And yesterday there was some major gains in the portfolio, and today there's been some major gains. And we're going to take a look at these two stocks that have been doing very well and my thoughts on it. So I was supposed to do the UK stocks I'm buying video for December. Obviously, I'm not doing it. I was planning on doing it today, but I'm not going to do it today. I'll probably get to that to you guys on either Sunday or Monday, so I will get that to you at some point, don't worry. But apart from that, let's get started. Now, just to let you know, on the Patreon, I've just dropped an earnings review on the stocks that reported this week: Card Factory, Watches Switzerland, Ulta, W7 and Lululemon. And on there, I go in a little bit more detail to the numbers and where I potentially could be selling some of the profits that I've made on it. So if you do want a bit more of that and get to know my live buy and sell alerts, you can join the Patreon, links in the description, £5 a month. And as well as that, if you want some free shares or free fractional shares worth up to £100, join Trading 22 with a link in the description as well. That's personally an investing platform that I use. So yesterday we had the rally on Watches Switzerland, absolutely monster rally. The stock is up 21%. Andy P, I've still not heard from you. Card Factory as well, a little bit of a bounce as well yesterday, which was really nice to see. But today we had another two stocks join in. The first one, Lululemon. This stock is up 17% today, monster rally. I am now up over 60% on my Lululemon position, which is great. I pretty much caught the bottom on this stock, but I would like to have made it a little bit bigger than where it is right now, but I'm not going to complain because I still bought a decent chunk, and I'm happy with the return that I do have. They came out with earnings last night. The earnings were pretty decent. You can see here EPS was a nice beat of 0.15. Revenue growth of 9% and a little bit of a beat, but they also upgraded the guidance just slightly. But I think the market also liked. They said they're going to buy another 1 billion of stock on a buyback program, which was great to see. I think realistically, the reason why Lululemon has just rallied so much since I've been buying the stock, really, you can see that since August time, the rally that Lululemon has been on. I think mainly the reason why the stock has been rallying so much isn't really because the earnings have been absolutely amazing. It's just that people just sold it off too much. The stock in July time, went to 20 times earnings, and on a forward P ratio, this was 16 times earnings, and it shouldn't really happen because you look at Lululemon's numbers. And the EPS went from $12 up to $14. We're still expecting 9% revenue growth next year. I think analysts may be lowballing these numbers, but still, nearly double-digit growth next year. I think they'll actually get double-digit growth next year. And you look at the international growth. The international growth has just got so much potential. You look at this. It's like Watches Switzerland. You look at Watches Switzerland yesterday, and you can see the growth plan. They're coming like a US business. They're just opening up more stores in the US. As they do that, that'll just accelerate the revenue and profitability. You look at Lululemon, it's same with like the US. They kind of mature in the US. Now they're moving into China and Europe, and that's going to be the major growth drivers for them for the next kind of few years. And the plan was very clear that Lululemon had just sold off so much, and eventually the market looked at that and went, oh yeah, there's a few things that did go a little bit wrong. They were a little bit slow on some of the designs, for example, but they can manage all that. You have to look at the brand underneath, and it was quite clear that this apparel company was just too cheap, and it was one of the better opportunities out there. I saw a lot of people on the YouTube scene were kind of like focusing on Nike stock, and they were talking about Nike stock, keep buying the Nike stock, or Nike stock's going from $75 to $225. And unfortunately, like these people that are talking about this is where basic stock picking just doesn't. If you ran the numbers, it was clear that Lululemon was just way undervalued, and these people that somehow have such big followings on YouTube just don't know how to value stocks, because these people talk about buying Nike, and I like Nike, it's a good brand, but at the end of the day, we're not buying stocks because they're a good brand. You need to be buying undervalued companies. And I'm sorry, I just looked at Nike, and every time I looked at it, I thought, I don't know how you could sit here and look at Nike and think it was a better stock pick than Lululemon. I said Lululemon was the better stock pick than Nike, and that's what it's turned out to be. And it just came down to basic investing. Because you compare Lululemon to something like a Nike, for example. Nike is currently, the EPS is falling rapidly, as you see here, $3.73 down to $2.78. Declining revenue of 7%, and yet next year only 4% growth next year. I'm sorry, but when you Nike and you're 23 times earnings, and let's not forget the profit's going to fall a lot this year. So actually, when you start looking on a forward PE, which you need to start doing, you need to start factoring future growth in. Nike's 29 times earnings, and Nike's a good brand. It's not 29 times forward earnings good though. And you look at the growth here. 4% revenue growth. I'm sorry, if you're 29 times earnings, You can't be growing 4%. Not when you can go get Lululemon that's growing over double that, and it's nearly half the valuation. You just don't do it. That's basic value investing. And a lot of these people that have been, you know, buying Nike, I think they're a little bit stuck at the moment because it doesn't look good for them. You know, you look at the recent earnings, it doesn't look good on the recent earnings. It's just getting worse. And the fact that you even go on to Foot Locker's recent numbers this week, and Foot Locker individually called out Nike as a very weak brand, that's a major issue. You know, you look at the Nike's recent earnings, and their direct to consumer is the weak part of the business. They're actually the successful part of business at the moment is Nike, is the wholesalers, which totally goes against what Nike has been doing. And the other thing that you have with Nike as well is that for so long people go, oh, it's don't worry about it, it's untouchable, competition won't come in and affect it. Unfortunately, in apparel you can't do that. You know, apparel is one of the easiest markets to breach a moat, and I won't say there's really a moat in an apparel space. That's the big issue. So people that have been going, oh, Nike's untouchable, I don't think so. It only takes a couple of good brands and eventually they'll take a little bit of market share off them, and you've got the likes of Lululemon, you've got the likes of On Holdings that are coming on and taking market share. And when you're the top dog, you know, when you're the top dog and there's not much space for you to grow, the only thing you could do is increase prices. But when you pull the lever of increasing prices and then you're still slowing down, where'd you go then? Unfortunately, losing market share. Unlike someone like a Lululemon, for example, it's clear to see, you know, you had the growth because you looked at someone like Lululemon, you go, you know what, if the US is crap for the next 12 months, you know what's going to bail them out? The international growth. And they've got so much potential there that even if the US stayed stagnant, this company would still do very well. And that's why Lululemon was always the better buy, and that's why it's been doing a lot better than Nike. So hopefully some of you guys were looking at Lululemon rather than Nike, because that was the better purchase to be making during that time frame. The other thing now I kind of say is, like, you know, when it comes down to selling, you know, like I said, you know, I always a little bit nervous around wearing owning apparel stocks and retail stocks because they do go out of trend or into trend so fast. So that's the only thing I've got to kind of consider now with the profit that I do have. But hey, it's a nice problem to have. And the last one was Ulta. Ulta was up 9% today, and once again another stock that is starting to bounce back after being absolutely slammed. The earnings were okay, you know, really nice beat on the EPS, revenue back into growth of 1.6%. Little bit of an upgrade on the outlook. The only difference I have with like Ulta compared to the other stocks that I've talked about this week and Lululemon is I do look at this one and I go, right, 17 forward times earnings. It's, you know, it's a little bit more on the richer side. And the problem is when I look at Ulta Beauty, it's a bit like a Nike. You know, Nike is kind of like maxed out everywhere in the world. Ulta is maxed out in the US. The only way that Ulta will get major amounts of growth now is expanding internationally, and that's the only, you know, is it going to be able to do that? And the other thing with Ulta that I've got to consider is that this has kind of like jumped up a little bit now, but realistically, like, this is only 1% growth. Like, if for Ulta to kind of get to the valuations that I want it to, Ulta's got to go back to like 3, 4, 5% growth a year. So it's got a fair bit of improvement to, you know, it needs to do for it to kind of reach its valuation here. And that's one that makes me a little bit more nervous, because Lululemon, if it grows these numbers, I think can still do okay. I think Watch the Switzerland can still do okay. Ulta, it needs a little bit more growth for me to justify it, holding it at these sort of valuations. So the other thing is that it's coming up to its, you know, a lot of these stocks are coming up to the peak period now of Q4, and I think like to sell it out of the Q4 period, before a Q4 period, would be maybe a little bit stupid. I don't know, but it's the one that for me that I look at the jump in Ulta and I go, yeah, it's a good jump, nice numbers on the EPS, good revenue growth, but there's still a lot of improvement to kind of go here for Ulta to kind of justify hitting my numbers. So yeah, we'll keep an eye on that one, but for now, we'll celebrate it, and obviously it's done quite well. So that's the last one that reported earnings, and obviously another nice jump today as well. So yeah, that's video today, guys, looking at some numbers from Lululemon compared to Nike and why Lululemon has outperformed Nike in the last kind of couple of months after the dips, and also a little bit of news on Ulta as well. Apart from that, guys, I'll probably see you on either Sunday or Monday whenever I do the UK stocks I'm buying video anyway. Hope you enjoyed the video, guys. See you in a bit.